Hi, thank you everyone for dialing into today's webinar by Merkle Science on the topic of is Hong Kong still a competitive jurisdiction for virtual asset businesses? Now, with what's going on with the whole COVID situation, I know most people are working from home. And so there has been a lot of webinars out there put out by different companies. But given, what's happening, we thought it would be apt for us to do one on the Hong Kong market, given that there has been some interesting developments over there for crypto asset providers. And I have with me today as well a very distinguished panelist of individuals representing companies from the custodian space, legal space, as well as the advisory and VC space, which I think will be able to add a lot of value to the topics that we'll be delving into today. So before we begin, allow me to first, do a short introduction about myself, Merkle Science, before getting into the webinar discussion itself. So some background about myself. My name is Ian Lee, and I am one of the founding members of Merkle Science, as well as the VP of Business Development. So Merkle Science, very simply put, we are a company that detects, investigates, and prevents crypto crime. And we're headquartered in Singapore, but we have offices as well in Korea, Japan, as well as in India. So the question is, what is crypto crime? For those of you who have been in the crypto space for a period of time, I think everybody's well aware that typically, with cryptocurrency, people always equate that to criminals using it for buying and selling drugs, or in terms of ransomware attacks and the like. And you're not too far off. The definition of crypto crime as we see it is really the illicit acquisition and use of cryptocurrency for money laundering, terrorist financing, and other criminal activities. And as we move to a shift to a more digital economy, nowadays the way that we view criminals, it's more in terms of the picture on the left, people sitting at home in their hoodies in front of their laptops, as opposed to people meeting up in bars and discussing in person. Now, the impact of crypto crime is not to be understated. In fact, in 2019, it's estimated that $11 billion worth of cryptocurrency were transferred by criminal entities. And this was a 160% increase in crypto crime losses from the period of 2018 to 2019. Now, the process of crypto crime, to put it very simply, can be looked at from three different perspectives. On the first hand, you have the acquisition methods that these criminal entities use to gain access to cryptocurrencies. And typically, the ones that we're most familiar with would be exchange hacks, ransomware and extortion, investment scams and frauds. And once these crypto crime organizations have acquired the cryptocurrency, it then becomes a matter of how they launder the funds. And again, we've seen this time and time again as they do it through exchanges, ATM, coin mixers. And typically, it's not always criminal organizations that perform such activities. We've seen individuals, as well as scammer groups, hacker groups, as well as sanctioned states, all engaging in using cryptocurrencies in their illicit activities. Now, some recent examples of crypto crime, just to give you guys an idea, with the rise in COVID, we've seen many organizations start implementing ransomware with linked to a COVID-19 scam, right? Asking people for donations. And more recently, just earlier today, we saw that Twitter actually got hacked. And with that, there were a couple of well-known individuals and organizations which had their Twitter profile taken over, asking for payments from the general public. And to date, it's actually pretty interesting to see that one of the cryptocurrency Bitcoin addresses have successfully collected over $120,000 worth of Bitcoin just based on that scam. So it is prevalent, it is happening today, and it is something to be wary of. Now, in terms of combating crypto crime, we've seen, regulation come in around the world. Just last year, the Financial Action Task Force came up with a list of recommendations, notably the travel rule, which is imposing SWIFT-like requirements on companies looking to deal in crypto assets, as well as, coming back to the topic at hand, we've seen in Hong Kong, the Securities and Futures Commission introduced a framework for security token operators, and as well as having an optional licensing framework for companies not dealing in security tokens, but rather just plain vanilla cryptocurrency assets. So Merkle Science. Basically, Merkle Science, what we do is that, as I mentioned before, we look to detect, investigate, and prevent and crypto crime. And the way that we do it is a combination of software tools and service elements. So we have first and foremost a blockchain transaction monitoring platform that we work very closely with the likes of exchanges, custodians, and payments companies to identify, where their customers are sending them cryptocurrency from. So be it ransomware, darknet marketplaces, sanctioned addresses, we'd be able to detect that in real time and communicate this information to them so that they can block the transaction and then make an appropriate report to the regulators. We have a forensics tool that we work very closely with law enforcement and again, regulators to investigate and apprehend these criminal entities. And finally, the way that we like to work with financial institutions is in producing intelligence reports in the form of due diligence and investigation reports to help them manage the risk that comes with dealing in crypto assets. So again, broadly speaking, we work with crypto asset businesses, financial institutes, government agencies, and research and technology companies. These are some of the industry collaborators that we work with, both locally and globally. So we have the likes of Access here in Singapore, where I'm based, and then international organizations such as the Global Digital Finance GDF Group that most crypto players will likely be aware of. And finally, just to talk a little bit about investors, we have at least DCG, SG Innovate, and I'm very proud to say we have as well Kinetic, of which Jahan is very kindly one of the panelists in today. And aside from that, we have Entrepreneur First in the UK, Lunex in Singapore, and finally BitMEX as well. So enough about myself and the company. Everybody's here today really for the topic at hand, which is Hong Kong still a competitive jurisdiction for virtual asset businesses? So allow me to begin by saying, we live in a very interesting and exciting time. Again, with the COVID-19 pandemic, people are staying at home as much as possible. And this has accelerated the world to shift to a digital economy. And at the same time, we are seeing a resurgence in the crypto industry with more and more countries implementing new laws around the use of blockchain and digital assets. Now, thankfully, with clearer laws in place, we've also seen a new wave of service providers willing to work with blockchain companies to perform operations such as audits, code review, assurance, as well as technology companies providing tools such as blockchain analytics to manage the AML and CFT risk that comes with dealing with crypto assets. Just recently, I've also read that a number of national banks around the APAC region have started looking to introduce their own central bank digital currency. And I'm very proud to say that Merkle Science is actually actively working with a couple of them to come up with appropriate frameworks to mitigate potential AML risk. Now, before everything, I actually had the pleasure of making multiple trips down to Hong Kong, and I found it to have a very thriving blockchain ecosystem. Many companies were attracted by the capital to be found over there and had set up offices. Since then, there's been a number of regulatory changes, as well as the introduction of the STO framework that I had alluded to briefly. And asset managers, as I understand it, can now also hold a certain amount of their portfolio in crypto. In today's webinar, together with my distinguished panelists, we will explore some of the various issues with the theme of determining whether Hong Kong still remains a competitive jurisdiction. And to kick things off, what I'd like to do is first invite each one of my panelists to do a short introduction about themselves and to share about the work they're doing in this space. So in typical gentleman fashion, ladies first, Ursula, would you like to kick things off?
Thanks, Ian. Sure. So hi, everybody. My name is Ursula McCormack. I'm a partner of an international law firm that's headquartered in Hong Kong, Kingwood Mallesons, and I head up the fintech and blockchain practice in Asia. My remit is to look at all things financial regulatory across, banks right through to developers, and so work a lot on virtual asset issuance, right through to the development of custodians, exchanges, and right up to sort of government level projects. My key focus areas are financial regulation, but also data regulation, and then the pointy end of financial crime compliance for both the sort of institutions that operate at the sort of cutting edge of innovation, but also traditional financial institutions. What's been really important to me over the years is to be involved at the sort of industry and policy levels. So I sit on the SFC's FinTech Advisory Board and have been very heavily involved in the FinTech Association over the last few years. And so the work that I do is, yes, advising clients, but also helping to sort of push forward the sort of narrative on regulation, both in Hong Kong and abroad.
Thank you. Jahan, would you like to go next?
Sure. Thanks, Ian, for having me. My name is Jahan Chu, and I am the managing partner of Kinetic. We are one of Asia's earliest kind of investment firms in blockchain and cryptocurrency. We're based here in Hong Kong, obviously, and we invest across the world, but with a concentration in Asia. And we invest both in equity as well as tokens. We also have a high frequency trading desk and are involved in a number of other things as well in the community. So I helped to start the Bitcoin Association of Hong Kong in the early days, and I started the Ethereum community in early 2014. So I've had the good fortune to be able to see multiple cycles of Hong Kong's growth and development and expansion in both blockchain and crypto. And of course, very, very proud to be on the journey with Merkle Science. So thanks again for having me.
Thank you, John. And Alessio.
Hi, thanks for having me here. So my name is Alessio. I'm the co-founder and CEO of Hex Trust. We are a fintech company headquartered here in Hong Kong, and we focus on providing custody and building the financial markets infrastructure for digital asset to financial institutions. Prior to setting up Hex Trust, I was an engineer, but funnily enough, I started my career in the Italian SFC, where I was working in the market abuse department. Before and after that, I had different roles in different banks here in Hong Kong. Then 3 years ago, together with another co-founder, we set up Hex Trust to provide infrastructure to financial institutions who want to enter the digital asset space.
Got it. Thank you very much for the introductions, everyone. So as we delve into the different topics, what I'd like to say to the attendees as well is that we will be reserving some time at the end of the session to take questions from the audience. So if anyone does have questions throughout, feel free to type them out inside the chat. And when we come to the end, we will be spending some time to address as many of those questions as possible. And I do apologize, if we don't manage to get to all of them. But in instances like that, we will be happy to facilitate direct connections with any one of the panelists. We'll be more than happy, I'm sure, to address them with you on a one-on-one. So to kick things off, for the benefit of those in the audience who may not be familiar with the current regulatory climate, and that actually includes myself, it would be great, Ursula, if you could provide us with a broad overview of how crypto is currently regulated in Hong Kong.
Yeah, sure thing. What I wanted to do was to set out how you generally look at regulation of this asset class generally, not just in Hong Kong, but globally. And there's generally two key buckets that you look at. You look at direct regulation of the assets, might be a subclass of those assets or the asset as a whole, asset class as a whole. And then you've got indirect regulation. And what I mean by indirect regulation is that you've got the regulation of asset managers, banks, others, that then drives the conduct of others in the ecosystem. So to give you an example, if an asset manager has to apply certain standards to its choice of a custodian, then that drives the behavior of that custodian indirectly through that regulation. So two key buckets, and I'll focus on this side because the direct regulation of virtual assets as a class has been where there's been the most divergence globally. And what we're seeing at the moment is that as an asset class generally, Hong Kong does not regulate virtual assets as a whole, but it does regulate a subset of those assets, and that's particularly those that fall into already regulated buckets, securities, for example, or if they operated like a stored value facility and so forth. So So Hong Kong is very competitive in that sense and attracts a lot of interest, because if you were just to operate an exchange that's, where it's, really just trades on a Bitcoin on a spot basis, you don't have any specific regulatory, regime that applies to that that exchange. But as soon as you veer into security tokens, well, you're in the world of regulation. So that's sort of where the state of play is at the moment. Now, what's changing globally is that virtual assets as an asset class will be regulated globally, in the future going forward. And Hong Kong is on that track, but is not sort of implementing that imminently. And the reason for that is the Financial Action Task Force, which is a global standard setter on AML, and really drives regulation not just on AML standards but also licenses, has effectively recommended, which means kind of effectively required, its members to have a degree of regulation and oversight over the whole sector. So that's something that we look ahead to, but as the sort of short and medium term, does not affect the industry. What I would say, I suppose, as a caveat to that is there is this opt-in regime which you had on your last slide. So if an exchange has or wishes to have a security token, for example, on its exchange, it can opt its entire platform, not just that component, into the Securities and Futures Ordinance regime for exchanges of securities. And the SFC then takes an overall look at its operations. Now, that regime is still in its sort of reasonable early days and is sort of tracking along, and there's a lot of people who are in that, or a small number actually, that are in that group that will progress through it. But what that means is that, in the reasonably near future, you'll have exchanges that are regulated by the Securities and Futures Commission, that are subject to the usual prudential obligations that you would expect of those sorts of highly regulated institutions, and that will enable for certain customers a degree of comfort. But there are certain rules around that. But that's exchanges. There's also, for brokers. Again, the SFC regulates securities brokers, so security tokens are in that mix, but brokers of simple sort of virtual assets are not in that mix. I suppose just to sort of the sort of additional kind of players that are usually in the mix are custodians, payment services providers, lenders. So once you move into the sort of DeFi, or not quite DeFi, but sort of finance side, there's additional layers of regulation that kick in. But what really makes, I think, Hong Kong quite competitive at this point is that it adopts a reasonably neutral approach to the asset class, and still has a reasonable amount of maneuvering without automatically hitting a regulatory regime, unlike a number of other jurisdictions where it's either completely restricted, like in mainland China, or you've got this sort of, very broad, lot of legislation like we've seen Singapore enact. So I'm going to stop there. I could talk about it all day, but I'll stop there by way of introduction.
Thank you, Ursula. That was very helpful in setting the landscape. So, it's interesting. A lot of people think that people get into crypto are people who want to escape regulation, but interestingly enough, we've seen that as countries introduce licensing regime, it actually serves as something that attracts companies to come in, right? So again, going back to Singapore, where I'm familiar with the Payment Services Act licensing requirement out, we've seen over 200 applicants trying to apply for that license. And then going back to the Hong Kong side, one of the interesting things that I've read as part of the security token framework exchange would be that, it is mandatory, I believe, for these exchanges to use a custodian, right, to manage the risk involved with those digital assets. So, I'd love to hear from your perspective, Alessio, how has this changed? Have you seen an influx of companies approaching you as part of the licensing application? And what are your general thoughts?
Yeah, absolutely. I think, okay, I would take this question from two different perspectives, right? So one perspective is the regulation. Then obviously, yes, the custody part has to be taken into consideration when you set up a regulated exchange. Now, I mean, I will leave it to Ursula to go into the details, but obviously the custody part can be done more as an internal function within the exchange with certain kind of segregation of business activities, or it can be outsourced to a third party. But certainly it has to be taken into consideration. But on the other side, apart from the regulation, there are certain requirements that in any case, exchanges have to comply with in terms of custody, right? And these requirements have been, I would say they are quite strict as of now. So it is becoming a very specialized activity that is, that we're seeing more and more interest in outsourcing to specialized third parties. And I'll give you some examples. So in the case of the SFC, there are requirements in terms of the wallet structure that exchanges have to put into place. So they have to put in place, so what kind of, which amount of assets can be kept in hot wallets and which amount of asset can be kept in cold wallet. And so this implies that any entity that enters the space has to set up, to put in place a structure of wallet with cold wallets and hot wallets and some kind of a transfer mechanism between the different wallets. On the other side, there are requirements in terms of insurance, which are quite strict. And obviously for smaller, newly set up entities where custody is not their main activity, putting in place a comprehensive insurance policy might be quite expensive, right? And hence I would say this new direction of newly entrants into the space to actually rely on third-party custodians that have already put in place this infrastructure.
Thank you. Thanks for sharing. Yeah, this evolution of regulation coming in is very interesting. And going back to you, Jihan, that you mentioned you've been one of the early entrants in this space. You've had the benefit of seeing the crypto ecosystem go through multiple cycles, as well as see many other jurisdictions introduce licensing regimes. What are your thoughts in Hong Kong's approach to this, and how do you feel this will impact the market? Would it attract more companies to come over to set up operations? What would be your advice to a virtual asset business looking to enter the Hong Kong space?
Yeah, thanks. I think that from the very beginning, I think my first meetup for Ethereum was like in a bar, like in a dark bar in Sheungwan. Like 5 people showed up, and we had Stefan Tuel, who was very famously part of the DAO hack victim, I guess. And so it's come such a long way since then. It used to be, like you said, that escaping kind of regulation, escaping the gaze of the government was one of the kind of features and benefits of the technology. But obviously, it's kind of flipped. And really what the technology is really being seen as is a tool for efficiency, for transparency, for kind of scaling digital businesses, the transformation to kind of digital first type of existence. And I think that really blockchain and crypto really is the framework for that and the economy around it. So with that in mind, the entire world is not becoming less regulated. It's becoming more regulated. It's becoming more controlled. In some ways, to a fault, it's becoming more siloed inside of its particular jurisdictions, and countries are walling themselves off literally as well as increasingly digitally. And so like it or hate it, the move towards regulation and regulated jurisdictions and operating as a business, both digitally inside of that context, is necessary. So to answer your question, what would I advise companies to do? I would really, if you want to be a world-class company and attract high-quality investment and investors, you really do need to not only consider but find a way to build a business inside of this framework. There are, many companies which decide not to and are very active in, say, DeFi, and are kind of banking on a completely unregulated and completely, kind of borderless digital economy, which is also legitimate, but it's just about business opportunity, right? I'm not placing any judgment on what's good or what's bad. It's about market size. The regulated markets are going to be, and will, I think, continue to be exponentially orders of magnitude larger than the unregulated markets. And it's just a matter of like, what kind of company do you want to have? Would you like to be able to take advantage of, the institutional flow, institutional trade, regulated retail customers? If you want to attract that market and you want that business, then you should go get regulated, and you should kind of optimize for the best jurisdiction to operate in. I actually think that, our good friend Alessio and HexTrust, who, is actually a really good example of this, especially here in Hong Kong. In Hong Kong, we've been fortunate to have a relatively hands-off type of approach, so that, companies can build. But Hong Kong being, having the kind of advantage of, rule of law, and also having the advantage of, world-class like vendors and professional services across a range of, manufacturing and supplies and finance. They're really benefiting from operating and being able to attract like top-level banks and the talent that comes along with that. So that's kind of how you would need to kind of leverage Hong Kong in that space. If you want to be, like a footloose, fancy-free kind of like DeFi project, Hong Kong might not be the best jurisdiction for you, because the optimized kind of business scenario here is to take advantage of the types of resources. We don't have like deep, kind of developer resources the way that, Silicon Valley or Eastern Europe might have. So that's kind of how I see, what you should be thinking about if you're starting a company out here.
Thank you, John. That's very useful. And although you say that you guys don't have that developer community, as far as I'm aware, Shenzhen is right around the border, right? I know a lot of developers are then based out of there. So I think, you've painted a very attractive picture about the Hong Kong market, but, I realized that since, we have the benefit of a virtual asset company over here. Alessio, would you mind sharing your personal takes on, what attracted you to set up operations in Hong Kong?
Yeah, sure. I mean, obviously, well, there are advantages and disadvantages, right? So I think what Jihan mentioned is obviously very important for us, right? So if you want to, we believe in the regulated side of the business. So we have to be in a jurisdiction where there is a framework, where there is history, where there is trust in the financial markets and the other activities, especially for the type of business activities that we carry out, which is one of the ones that is most based on trust, right? So the custodian activity. But apart from this side, I would say that, so in the specific case of HexTrust, our main targets are banks and other regulated financial institutions. So obviously in Hong Kong is where we can find all of our target clients very easily. So this is a very critical point for our choice of being headquartered here in Hong Kong. Secondly, it is true that the technology pool of talents is probably not the largest in the world, but I would say that for fintech companies, you have to have the two parts together. So you have to have the technology people, but you also have to have the banking talents. Yeah, and here in Hong Kong, we have very good access to banking talents and to all the other professionals that work in the banking industry. Then I would say that, yes, obviously, the regulatory environment is important. And here in Hong Kong, we have found both, I would say, a capable regulator that has not banned completely the activities, or has not imposed very extremely strict rules for a nascent kind of business. So I would say a very good trade-off, and at the same time a very friendly legal and regulatory framework that we can operate in.
Thank you. Yeah, and thank you for bringing up the issue about the financial institutes. I do believe that Hong Kong does have a high concentration of financial institutions around there. And so I'd like to shift focus on the topic of conversation a little bit. And instead, let's look at the financial institutions. As I mentioned before, with regulation coming in, with different technology service providers, as well as traditional service providers being more willing to deal with cryptocurrency companies, I would love to get, each one of your take on, how's the conversation that you've been having with financial institutes changed over time? I know from Ursula, your perspective would probably be on the advisory side. You know, have you seen an increase in banks come to you saying we would like to take on, you know, virtual asset? What is the risk exposed to us? Jehan, more from an investment perspective. And finally, Alessio, again, from you would probably be being able to educate them on, you know, how using a custodian could mitigate some of the risk that typically involves, that comes with dealing in virtual assets. So again, Ursula, why don't you start? Yeah, thank you.
Yeah. Well, look, that's an excellent question. And, you know, the perspective has evolved tremendously, you know, just in the space of 3 years. You know, if we look back to 2017, you know, it was probably the most untouchable space for any financial institution. I mean, even fellow law firms, you know, wouldn't touch it. And, you know, for me as a regulatory lawyer, you know, was absolutely no issue to sort of tackle it, and extremely interesting. So, you know, that was beneficial for us and for a lot of institutions that were really able to sort of grasp it and really roll with it. You know, I think then there was a degree of schadenfreude, you know, as the market sort of fell off at the start of 2018. A lot of financial institutions saying, see, I told you so. This was always a scam. This was always terrible. You know, ICOs were the worst. You know, Bitcoin's going to fall through the floor forever, and, you know, we're never going to see it again. And, you know, what we've seen between then and now is that, you know, it has been a slow build, but has been a build nonetheless. And particularly around the development of enterprise solutions that leverage blockchain, not necessarily virtual assets. So, you know, sort of key trend number one, and that's sort of well known. But I think increasingly as the development of CBDCs, so central bank digital currencies, whether or not using blockchain, you know, or not, number one, but also seeing the value that stablecoins can offer, you know, within traditional financial market infrastructure, has really started to change the conversation. So, you know, probably, you know, 6 to 12 months ago, I was speaking to a lot of large banks that were sort of exploring offering virtual assets, maybe, you know, some more, you know, funky stuff for their clients, really now sort of starting to kind of really take a step back and say, well, actually, maybe we really need to rethink the infrastructure as a whole. Can we do it better? We're seeing JP Morgan coin, we're seeing DCEP out of mainland China, you know, any number of other projects, exchanges innovating. And, you know, that means that the innovation is really occurring right at the sort of fundamentals of finance. I don't think that the impact of DeFi has been felt really at all at the sort of financial institution level. But, you know, that sort of potential wave, you know, will come, at least so that it's on their radar in terms of the sort of opportunities and, you know, the innovation that DeFi really signals. The last comment I will make is that for banks that bank you know, institutions that are in the virtual asset space, that conversation has also started to change dramatically. And the reason for that is, you know, sort of multifaceted, but certainly creating those regulated environments, you know, that kicked off with the likes of Japan, you know, really creating an ecosystem of trust, you know, and now with FATF, that's changing the conversation for banks. Banks are starting to know what they need to do, what sort of beast, you know, it is that they're trying to tackle if they're trying to onboard that client. Seeing the likes of, you know, JP Morgan on board, Coinbase and Gemini, you know, that really is giving greater confidence to at least provide the support, you know, of the fiat on-ramps, for example, or at least covering the operating accounts for crypto exchanges or brokers or custodians. So that's what I've seen, you know, and I think that, you know, others will have seen similar or indeed other trends as well.
Yeah, so similarly, you know, in our work at Merkle Science, you know, we do work quite closely with a number of banks, and we have seen, you know, an interest from them in terms of onboarding cryptocurrency companies or companies dealing in crypto assets. The question then becomes, you know, how can they manage their risk? So thankfully, you know, working closely with us, we've seen a number of them actually interested in using the tool in order to actively survey their clients as part of their risk mitigation measures.
Well, that's a huge development, right? I think once you sort of, once financial institutions realize they get way better insight into transactions like that versus they ever would with cash, you know, that's a real eye opener, I think.
Yes, definitely. You know, typically with a bank, you know, the amount of information they have on their client's transactional activity is typically so limited, right? Directly, only what the client tells them. But with blockchain, you know, you have this ability that to see directly into how your clients are transacting their funds even outside the bank's ecosystem. And I think that kind of information, once they fully understand what they can do with it, will really reshape the way that anti-money laundering frameworks and processes are being developed. Yeah. So with that, Jehan, I'm 100% sure, you have conversations with financial institutes, be it from an advisory perspective or be it advising companies who are looking to get banked. We'd love to get your thoughts on this space.
Yeah, I mean, for us at Kinetic, our part of our thesis in terms of our investment is what we call an enterprise-first growth strategy, which really means, having come through multiple cycles and multiple waves of investment from as early as like 2014, really, we've seen how we've kind of like learned a lot of lessons and paid our way through some of these lessons about adoption. And so our enterprise-first growth strategy thesis is really around this belief that the first 100 million users and of blockchain and crypto will come from enterprise, will come through enterprise. And maybe it won't look like pure public chain Ethereum kind of applications. Maybe it will be a combination of private chains, permission chains, DLTs, CBDCs, which are not really blockchains, but it's all kind of part and parcel about the wave of change taking many different shapes. So we fully believe in this. We fully believe that the kind of opportunities of growth really lie there. And enterprise and banks form the largest part of that. It's at the core of the strategy. So whether it's a Fidelity, whether it's an Ant Financial, whether it's the Chinese government with their CBDC or their BSN national blockchain, or even other CBDCs, that's really where we see the growth coming. And I think that if you're a company out there and you're thinking about, well, what kind of company should I start? I would work backwards from adoption, and I would work backwards from enterprise. It's a double-edged sword because enterprise moves slow and banks move slow. But again, that's where we think the customers are in the early days. DeFi is a thing. It will be kind of very, very powerful. But part of this kind of thesis around finance and the transformation of capital markets into tokenized or DLT form, we think is really going to be around, driven by these large financial institutions. And so build the services that they will need, like you guys are doing with the AML stuff. Build the monitoring tools, build the kind of the rails. I think that's really where the opportunities are. It's not cool to build things for banks these days. It's not really what people get into startups for necessarily, especially not in cutting edge crypto. But we've seen many dear friends and great projects die because they couldn't get traction. They couldn't get adoption in the 2018-2019 period. They ran out of money. They folded. They made a lot of great tech, but not a whole lot of great customers. And so the pendulum is on the other side now, this kind of enterprise-driven strategy. And I do think it will come back to the middle, where after this first 100 million users comes on board via enterprise and banks and such, there will be greater opportunities for the startups to basically leverage and create better value and not have to pay their way through the education curve and the kind of that side of things for customers. Customer acquisition will be cheaper and easier, and they don't even need to know about crypto at that point. So that's where I think the real kind of opportunities are. Not cool, not sexy, but super effective. And I think that that's really where the opportunities are.
Thank you, Jehan. And I would like to push back. I would like to think the work that we do at Merkle Science is pretty cool. It's pretty sexy. But to shift gears a little bit, but back to you, Alessio, your conversations with financial institutes will likely be very different, right? Typically, when they're approaching you, they have already an interest to get into this space, right? But now they need to be educated on what it means to use a custodian service, right? Are you seeing the level of understanding in the officers in financial institutes when they come to you? Do they understand blockchain? Do they understand what a custodian is? How has that conversation evolved?
Okay, difficult question. I would say that, okay, on the custody side, right? So if let's divide the market into three categories of banks. So on one, most of banks, they don't do custody, right? So they use a third-party custodian. So they actually using or appointing or performing due diligence on custodians. Then you have those banks who actually provide custodial activities. Yeah, and then the third categories are more the largest global custodians in the world, that they do another type of activity, which is kind of managing a network of sub-custodians. Yeah, so the conversation is actually very different depending on which kind of financial institution we are approaching. In all cases, I think we are at a point in the market where basically banks and financial institutions have no more excuses to delay their choice to adopting digital assets, right? They only have the risk of being late in this market. So you see that you have basically an asset class, which right now, especially right now with the current macroeconomic situation, the asset class has a lot of interest in the market, thanks to companies like yours and other international coordination activities. Basically, the AML CFT risk problem is more or less solved. Yeah, and you have companies that provide platforms in the market that are available and they're already enterprise grade. So banks have understood that the market is actually ready. Now, where are we in terms of the process? For the first category of banks, the ones that they usually appoint a custodian for specific markets. Basically, the main problem is on the fact that for this specific market, they have to rely on companies that do not have a very long track record of custodial activities. So I would say that this is the main hurdle, and it requires probably a longer period of time in which they try to understand the asset class and what could be the risk for companies that are active in this specific business line. For the second categories of banks, so the ones that actually provide custodial activities. So this is a different business, right? Because what they're looking for is not for a custodian, but they're looking for a technology software solution that they want to integrate and internalize, so that they can become custodian for this specific asset class. So in that case, I would say that the few banks that provide custodial activities, they have already gone through their market analysis. They know the market quite well. Most of them, they know the technology quite well. They have teams of developers that have studied the different types of signing schemes, etc. So they know the market, and they're looking at the different providers, and they're choosing the ones that they think are the best for the integration within their business operations. For the global custodians, that is a little bit different because it's more of a network effect. So I think they still have time, and I'm talking about the bigger global custodians such as State Street, BNY Mellon, etc. Right? So they will be waiting until the market is more mature, probably, until they will look at integrating digital assets within their network of custody. I hope this answers your question.
Yes, definitely. Thank you for the very comprehensive overview on the different segments of the market. Now, looking back then as well, and this links very closely, the kind of services that you provided. One of the biggest challenges for virtual asset service providers, not just in Hong Kong but globally, is this thing called the travel rule, right? Which is basically this requirement that was put in place by the FATF last year, which requires virtual asset service providers to actually share information on the beneficiaries and originators of a transaction. And we've seen many countries struggle to implement appropriate laws, with countries like Singapore already including it in our Payment Services Act. which based on our conversation with clients, we've seen firsthand how much of a hurdle this has created for them, especially since it's unclear how such a requirement will pan out. I would love to get the panel's view on how Hong Kong is approaching this issue, as well as your personal thoughts on how this requirement will pan out, both from the Hong Kong perspective and from a more global perspective, how this is going to affect the crypto industry.
So I might just sort of kick off, perhaps for those who aren't as familiar with the travel rule, just to sort of give just a very quick synopsis of what it is. And really, it's a provision that is in the Financial Action Task Force recommendations that usually attaches to wire transfers. So where you're sending money across the globe, the information that accompanies the payment messages or is contained in the payment messages includes certain information around the originator and then the beneficiary. So where it's come from, where it's going to. And that information needs to go across not just to sort of the end, to the end person, but it goes through all the institutions. So in a correspondent banking relationship, the information might go through an intermediary organization as well. Now, in payments, that all makes sense because you have a system of messaging anyway. You've got Swift payment messaging system, and the actual direction of funds, the messages that actually move the funds from accounts. Are able to contain that information. Now, what FATF has done is to say, well, we want the same sort of system to apply to virtual assets, which means that we still get that flow of information going across to help minimize anonymous transactions occurring. Now, for anyone who knows anything about blockchain or really just even a general general understanding of it, you don't have that same framework. You don't have a payment messaging system that directs the movement of assets. We can transact peer-to-peer, and there is no necessity to sort of punch in names and details. You really only need to authorize the transaction with your private key and then have the public address of the destination there. So has these pseudonymous transactions are very easy. So in implementing this for virtual asset service providers, what FATF is saying is that the service providers, when they send those the transactions in virtual assets across, there needs to be sort of basically a parallel movement of information across to the other virtual asset service provider. Now, the key issue there is, well, the development of the right technology, and the standards around that. And there's a lot of work that's going on to help establish it so that you can, in fact, implement such an arrangement. But the second thing is how individual jurisdictions will implement the travel rule. So will they require, for example, for all transactions from their regulated virtual asset service providers to go through their wallets, or will they, still enable people to conduct direct transactions more peer-to-peer, so that they don't have to comply with the travel rules? So there's differing views around that, and there's a lot of other implementation details. For Hong Kong specifically, we're still a few steps away from that at this point in time, because the FATF recommendations around virtual assets generally, we still have some time to implement that. So all of that is working its way through regulators, and we'll see some detail around that. I expect that our regulators, and I know that our regulators are watching very carefully the implementation in other jurisdictions, but I do think that that's exactly where we'll see some differences in approach, and certainly a space to watch for Hong Kong.
Thank you for that very comprehensive summary, Ursula. Jahan, Alessio, do you guys have any thoughts on the travel rule specifically? I know for Alessio, you would probably be looking at it more from implementation, as it would be something that applies to HexTrust.
Yes, absolutely. Well, the travel rule is actually, I would say, it's a very positive development for the industry, and I would say for virtual asset service providers and custodians in particular. Right. So, well, in reality, what will happen is that, okay, it will decrease the risk that we run in terms of AML, CFT, right? So it will simplify from a compliance risk perspective the activities that we carry out, which is something that we like. And on the other side, it would also basically push all the service providers in the space to actually use specialized custodians or specialized virtual asset service providers that have already implemented the protocol. Yeah. So we will expect that other service providers in the industry that do not want to implement a whole compliance stack to comply with the travel rule, they will have to rely on custodians like ourselves to be able to operate their business and at the same time comply with the rules. These are two very positive aspects. On the technology and implementation side, to be honest, yes, it is complicated to come up with a solution that works for everybody. But I would say that the complication is more, as Ursula was saying, is more at the coordination level to make sure that everybody more or less uses the same protocol, that everybody exchanges the same type of information, that there is a global list of VASPs available for consultation by the other VASPs. But so it's more of a problem of coordination, while on the technological implementation is actually something not so complicated, and it will not really create a huge burden for us.
Thank you.
Yeah, just chiming in, I think that you know, the travel rules is actually going to, when it's kind of fully implemented and fully kind of complied with by those who choose to comply with it, which will need to be, you know, mostly everybody in the kind of proper business world. I think that it will kind of create a little bit of a not a freeze, but of an adjustment in the market. I think that will add kind of friction and add you know, a bit more kind of steps in terms of transactions, which I think will slow down what at least the kind of version of the market that we have today, the crypto markets. I think that it will adjust. I think that the benefits of, you know, crypto and blockchain are such that they'll outweigh the kind of challenges, the additional friction and steps and oversight and reporting that comes along with it. But it will, I think it will have an impact. I think the flip side of that is actually will also create opportunities in, you know, a new paradigm of, you know, kind of digital existence, which is, you know, I think will be the minority, but will be almost like this kind of third space, which does exist outside of regulation. It's non, you know, it's anonymous, it is private transactions. And we'll find a new class of applications which, you know, use that as its root. And people will choose to kind of basically opt out of the existing, you know, kind of transparent regulated system. Like I said before, I don't think that's the largest market, but I do think that we will see, you know, through necessity or through, you know, privacy as a premium service, we'll see that evolve, and there will be business kind of opportunities there. I do think it will be smaller than, you know, the kind of markets that, you know, that will abide by FATF and will be, you know, fully regulated. But for sure, we will start seeing privacy as a product and something that people will absolutely pay for in varying degrees. So I think that it's also an exciting kind of, you know, thing to look out for. And FATF absolutely is a forcing function to, for those who want to remain private and who don't want to be part of that kind of system.
I was just going to say, Jihan, I think you've hit it right on the head. You know, that we haven't talked about it today at all, but, you know, privacy is not just for people who are trying to hide funds or be criminals, but, you know, is a legitimate interest for everyone. It's written into the constitutions of almost every jurisdiction, even if it doesn't have a privacy law, it is written into it. And so, you know, that conversation is still sort of yet to be had, but, you know, that's absolutely the conversation that, you know, will continue to be had and will continue to escalate as CBDCs become become implemented and we move away from cash-based systems at all.
Yeah, I totally mirror your opinion, guys. I think, this aspect of privacy is definitely something very important. And it's definitely something that, a lot of the people who first got into crypto was what attracted them to this space. And, interestingly enough, in our work in transaction monitoring and anti-money laundering, we look very closely at this operation called a mixer or a tumbler, right? Which is basically something that allows people to send in their crypto. It jumbles it up and mixes it with other people's crypto before making a withdrawal. And typically, the way the regulation has come up in many different countries is that they assume that users of such services are all criminals, but it's actually not true, right? There are a lot of people who are willing to use such services simply because they respect their privacy. And interestingly enough, so in Singapore, regulation clearly identifies mixers and tumblers as high risk. But it's interesting because actually in the US, on the other side, mixers and tumblers are actually regulated as an MSB. And so you can actually get licensed to operate as a mixer in a 100% legitimate manner. Definitely, I mean, it's a little bit of an oxymoron because you sign up to Mixer, you go through the KYC processes and everything. And so you give your information to somebody, but then you mix your coins with other people's coins. So anybody using a blockchain analytics tool at least wouldn't be able to identify how you're transacting. But it is interesting to see, this concept of, privacy evolving in the crypto space. And then definitely you have certain countries outright banning privacy tokens. So with that, I am very conscious of the time. Before I close off with one final question, we do have a question from a member of the audience, and this is directed, I believe, at Alessio. So the question is, with the political situation in Hong Kong, how comfortable are you with keeping private key management operations and technology in Hong Kong? Isn't Singapore or another jurisdiction more secure or predictable? Yeah. Difficult question.
I think that question comes from the Singapore Tourism Board. You're muted.
Yeah, I know where the question is coming from. Anyway, yes, it's a fair question. Obviously, the geopolitical situation, not only in Hong Kong but everywhere around the world, is changing. So it is something that financial institutions and custodians have to, not only custodians have to take into consideration. Our approach has always been that we don't put all the eggs in one basket. So we have our operations in Hong Kong, we have our operations in Singapore, and we have our operations in Europe. So we plan to be licensed in 3 different jurisdictions, and we have operations in 3 different jurisdictions so that we can actually rebalance our business activities depending on where we prefer to operate the business. From our perspective and in line with our client's preference, which is actually, at the end of the day, is the most important part of our choice.
Thank you, Alessio, for taking the question. It's definitely not an easy one. And so with that, before we close out, I'd just like to invite, each one of the panelists to end off by sharing, what are your thoughts on the future outlook for the industry in Hong Kong? How do you see it evolving in the next 3 years?
So from my side, look, we will see the regulated exchanges emerge, and I think that will provide a really interesting, foray, into a sort of a regulated market for virtual assets. It will be for professional investors only at the start, and then we will see the implementation of the FATF requirements over time. In the meantime, I think that the sort of key questions really are to really get some data-to-day practical implementation sorted out. So for example, when using analytics, just to get a really credible, solid kind of approach and a reasonable approach, to dealing with customers fairly, so that if they are using mixers, tumblers, privacy coins, that, you're sort of not just necessarily excluding them, but really working through a lot of the detail and the FATF travel rule on those types of implementation questions to sort of really have a robust system in place.
Yeah, I think, you know, thinking about Hong Kong really as a place for kind of business, we really haven't talked so much about the China CBDC and the China National Blockchain. And, you know, that this is it's not an 800-pound, it's like an 800-ton, you know, megaton, you know, kind of gorilla, which is literally going to change the entire complexion of the global economy, you know, within the next couple of years. And Hong Kong sits at the doorstep. So obviously, you know, things are becoming even more closer. And I think that the opportunities, you know, to be in Hong Kong and to be at the doorstep, some of the most exciting, you know, innovation and I would say kind of reshaping of transactions and business, et cetera, both on a retail and institutional level. It's pretty exciting. And, you know, much love to Singapore, but at the same time, like you guys are 4 hours away. It's different, right? Like you said, we've got all these developers right across the border. I think that from a professional services and financial, you know, kind of standpoint, Hong Kong really does have a bit of an advantage over Singapore in that respect. And that one respect itself is, you know, it will make or break generations of kind of businesses. So that's really something that I think people are not, I never hear anybody, you know, outside of kind of blockchain and crypto talking about the CBDC and the national blockchain, but it is going to be like a shockwave to everything. So I think that Hong Kong is a good place to be.
Well, I can agree more. I think it's really a very good place to access a huge opportunity, and completely agree with exactly what Jihan just said.
Well, I'm convinced, guys. I'm gonna, you know, go back to the team and say it's time for us to set up an operation in Hong Kong, and you know, Ursula will come to you and get all the legal paperwork documentation in place, and we'll hit the ground running. So with that, you know, thank you everyone for attending today's session. For the attendees, for those of you who are interested in getting in touch with any of the panelists, don't worry. We will be circulating an email with the contact details of each one of them. And for those of you who need assistance with anything related to AML, feel free to contact me or someone from my team. You know, I'm pretty sure, you know, HexTrust would be happy to provide anyone custodial services. Ursula would be the person to go to if you need regulatory assistance in Hong Kong. And finally, for those of you who need advice, for those of you who need funding, we have our man here, Jihan, who'll be happy to assist you. And with that, thank you everyone for attending. I wish you all a good Thursday and Friday, and looking forward to the weekend. Thank you, everyone.
Thanks, Ian.
Thank you.
Everyone.
Thank you. Bye-bye.
Bye.